What do you think Tesla's stock price will be after the company releases the Q4 2022 report? Even experts are torn in their Tesla stock valuation by January 2023 after Tesla reports Q4 results. Some are convinced that Tesla stock will retain its current valuation at around $123 per share, while others believe that it will soar. You surely would not want to miss this. Tesla stock has had a rough run recently, shedding around 37% in December, and it's down about 68% for 2022. However, Tesla CEO Elon Musk and the global EV giant are looking to close out 2022 on another sort of high note, with the expected release of global Q4 and full-year Tesla deliveries in early January. Tesla suffered its worst one-day loss in 11 months in late December, plunging more than 11%. Shares then rallied, cutting weekly losses. Despite the Tesla stock sell-off, Musk recently told Tesla employees that they should not be bothered by stock market craziness, and the focus should be on padding the end-of-year Tesla deliveries, Reuters reported. The fall-off came amid a Shanghai plant shutdown, weak China sales data, and continued chatter around CEO Musk and his purchase of Twitter. However, analysts are still bullish on Tesla, even as the EV market and the auto industry broadly are expected to face roadblocks in 2023. With Tesla delivery data expected soon, Tesla stock recently advanced 1% to $123.18. Last week, Tesla stock dived 18% to $123.15 after plunging 16.1% the prior week. Those are the worst weekly losses since the March 2020 COVID crash. According to analyst consensus, fourth quarter Tesla deliveries should reach 429,000. That would mean roughly 1.34 million for the full year 2022, up 43% from 2021. Analysts are also projecting Tesla deliveries will swell 46% in 2023 to 1.96 million vehicles, according to FactSet, a financial data company that lists more than 40 analysts that cover Tesla stock. Analysts expect Tesla's earnings per share to grow 49% to $1.27 in Q4. Revenue is targeted to swell 47% to $26.01 billion, roughly in line with the past 3 quarters. However, the forecast for the coming year call for slower earnings and sales growth ahead. Analysts are betting on robust Tesla profits and deliveries, but the unlimited demand bull thesis has taken a blow. Some analysts expect Q4 Tesla deliveries to come in well below consensus. Morgan Stanley analyst Adam Jonas cut his Tesla stock price target to a still hefty $250, but also slashed his Q4 delivery target to just 399,000 in late December. Previously, it can be noted that CNBC reported on Morgan Stanley's Tesla pick, where the analyst highlighted the investment group's optimism and maintained its price target for Tesla at $330, as well as expressed their optimism on Tesla's near-term future. While we see 2023 as a challenging year for the EV market categorically, we believe Tesla's gap to competition can widen, Morgan Stanley stated. However, as previously stated, Morgan Stanley's Adam Jonas cut Tesla's price target from $330 to $250. Still, that seems plausible, as Tesla stock is still currently trading below $125 per share. However, even with headwinds and macroeconomic challenges, Tesla Q4 deliveries should easily surpass Q3's record 343,830 EVs. That was up 42% versus a year earlier, but missed analyst estimates. Tesla produced 365,923 vehicles in the latest quarter, more than 22,000 above deliveries. Tesla delivered 325,158 Model 3 and Model Y vehicles in Q3, along with 18,672 Model S and Model X luxury EVs. If demand were red hot, Tesla deliveries could have topped 450,000 in Q4 given its production capacity and existing inventory. Instead, Tesla sales are expected to lag those levels considerably, with hefty discounts needed in its main markets. While fourth quarter deliveries around this level could be good news for investors, it may not be enough to soothe their worries. Concerns about Tesla are more focused on what the company can accomplish in 2023, so any commentary in the upcoming update about demand or expectations for delivery volumes in Q1 or the full year of 2023 will likely be more important to shareholders than Q4 delivery figures. Unfortunately, however, Tesla's quarter-end production and delivery updates usually don't provide any forecasts. Several things have Tesla investors on edge about expectations for 2023. First is the China-based electric car company NIO, which recently lowered its forecast for fourth quarter deliveries by about 9%, citing the impact of a growing number of coronavirus cases in major cities in China. This gave Tesla investors more reasons to be concerned about how sales are faring in China. Another sign of potentially waning demand in China has been reports of Tesla's reducing its production output at its factory in Shanghai. Finally, a move from Tesla recently to cut prices on its Model 3 and Model Y vehicles in the US has also raised concerns about demand for its vehicles. Some of these recent headlines are certainly cause for concern. However, it's extremely difficult to predict whether some of these issues are only short-term in nature as the company tries to address temporary challenges, or if they're indicative of problems that could persist throughout 2023. While Tesla's upcoming reported deliveries will be a useful data point for investors, the company may need to provide more information before shareholders can get a better idea of what they can expect from the company in the future. To this end, investors will be hoping for commentary from management, implying it's bullish about continued strong growth in deliveries in 2023. "I'm worried about the general economic environment," said Kahlo on Bloomberg Television a few days ago. "Do people have the wallets to pay for $60,000 cars? That's what the market is worried about too." The Austin, Texas-based company has a long history of going all out at the end of the quarter, with Tesla employees from across the company pitching in to help hand over cars to customers. On the last earnings call, Chief Financial Officer Zachary Kirkhorn said that 1/3 of the quarter's deliveries happened in the final 2 weeks of the third quarter. It can be noted that Musk recently circulated comments in a company-wide email which CNBC obtained. He told staffers that Tesla needs to demonstrate continued excellent performance, and that, long-term, I believe very much that Tesla will be the most valuable company on Earth. In the email, Musk thanked Tesla employees for their work in 2022, encouraged them to push hard for a strong fourth quarter finish, and asked them to volunteer to help deliver cars to customers before midnight on December 31st if at all possible. Whatever Q4 results are going to be, there are two major catalysts for Tesla stock in 2023, which will surely be good news for its shareholders. While it's important to know which way the stock price will move next year, there are a couple of reasons to believe the stock could attract some positive attention. Two catalysts are on the horizon that could excite investors: soaring sales in the company's energy business and the long-awaited launch of the Cybertruck. While Tesla's 42% year-over-year growth in vehicle deliveries in the third quarter was impressive, one smaller part of its business was growing meaningfully faster. The company deployed 1,100 megawatt-hours of energy storage, up 62% year-over-year. This was, by far, the highest level of energy storage deployments that it has ever achieved, Tesla said in its quarterly letter to shareholders. Yet demand for these products, management said, is still trending ahead of supply. To better address the fast-growing market for its energy storage business, Tesla said it was ramping up production at its factory in Lathrop, California. The momentum in this business seems to have continued into Q4. Indeed, the company announced on December 9th that it deployed 100 megawatt-hours of energy storage capacity in a single project in Belgium. However, while the energy storage business is important to Tesla, it's still small in relation to overall revenue. In Q3, for instance, automotive revenue accounted for about $18.7 billion of the $21.5 billion in total revenue. For this reason, the company's vehicle plans are likely to be the biggest driver of sales. This is why investors should be watching Tesla's management comments on Cybertruck closely. The long-awaited all-electric truck is in its final lap of preparation before the company can begin production, said CEO Elon Musk during the third quarter earnings call. The vehicle is expected to enter production sometime around the middle of 2023, according to management. Tesla initially planned to begin production of the Cybertruck in late 2021, but global supply chain challenges in the automotive market and worse-than-anticipated logistics constraints led Tesla to prioritize the production growth of existing models, repeatedly delaying the Cybertruck's launch. It's always possible that the Tesla Cybertruck's launch will get delayed again, but its move to market does seem to be close enough for investors to start giving more weight to the vehicle's sales potential in their analysis. Putting the hype for the vehicle into context, Tesla has garnered an estimated 1.5 million reservations for the vehicle by November 2022. For now, whether Tesla stock's price after Q4 results will be around $250 remains to be seen. Make sure to subscribe to this channel for more Tesla stock price predictions.